Shout out to everybody here on the live. Thank you for jumping on in. I appreciate each and every one of you for being here. God bless everybody for jumping on in. And so, look, this 7-minute did a bullish retest here. I wanted to hold the top of the channel. Came down, bounced back to the upside. Now we're hot at 28,650. Bitcoin bouncing all over the place with the basis point of 0.25. So that brings us to 475 on the basis points here as we look at what's happening to Bitcoin on the 7-minute chart. I've been watching this flag ever since this morning, since we got the break to the upside here, and we got the initial pump out of that 1-hour flag that definitely hit my target, which is 28,544. We started this trade at 27,000, basically 940, 960 area. All right, to the upside. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here. Let's get the likes up to the watchers. I would greatly appreciate it. We're going to get into this meeting at 2:30. We have about 25 minutes to get through. We're going to go through some super chats, talk about what's happening, break it down for you, and then we're going to break down the meeting. Capital was in trouble. Maybe one to keep an eye on. Capital won. Banks bad. Bitcoin good. Okay. Shout out to everybody here on the live. Thank you for being here. And if you want to go cross-chain, remember Rubik gives you cross-chain. I've used them. They never contacted me or anything, but I've used them many times. Rubik is amazing. I like Rubik a lot. If you want to jump on into Rubik, it's a beautiful, beautiful place to do decentralized cross-chain agnosticism. Why Rubik? On-chain, cross-chain. 15,500 tokens on Rubik. Shout out to Mar Barley in the house. Let's take a look at the DXY and break it down. What's happening to the DXY? Bitcoin pumping hard. That's a bullish retest there off the bottom. If we look at the 15-minute, also the 15-minute, it's about to spike up hard. When the stochastics get low like that and you hit a bottom trend, you're ready to rock. I got a measured move for Bitcoin up at 30,000. That's what I'm looking for us to go. That's where we're supposed to go to. That's where this pattern is attempting to take us to $30,000. I still have a Maxi trade open, and it's up $117 on 400 bucks. It was a very small trade, just showing people how to do a very small 10x trade, $100 on $400. Not a big deal. I'm not a huge leverage trader, and I can say that openly, and I don't care if you judge me. I've made hundreds of thousands of dollars off of my investments in cryptocurrency. I don't need to prove myself to anybody, but I do show you that, hey, that trade is up. We opened it down here, and it's continuing to plow to the upside. Actually, the highest it's ever been right now as Bitcoin hits 28,680. They just wrecked a bunch of people, took them to the wayside. They had a huge buy wall down here set at 27,006. It looks like we did touch that. I had to take this down for 1 second when I rebooted my computer. They just did a beautiful short squeeze, 179, 98,000. I believe the short squeeze could continue. Let's see where the liquidity gives us. The liquidity really was stacked up here at 29,200. We got very, very close to that area. Let's see where we tapped. We hit 28,869 here, but on the futures, we definitely did higher. Let's take a look at the DXY. As people saying it's starting to collapse to the downside. Let's take a look at our DXY. Wow, massive dump for the DXY. That's a beautiful sign. That's what we want to see. Nobody wants to be in the dollar. Nobody wants to hang out. If you're in my trading group, if you've been watching me for a long time or the last few days, I gave you this shoulder, this head, and this right shoulder on the DXY. Who gave it to you? I'm one of the only people that actually saw this head and shoulder pattern. It was insanely scrubbled and messed up. It's a drunken head and shoulder. You flip it upside down, it's a drunken inverted, absolute insanity. But so far, it is playing to the downside. All right, let's get rid of that now because it's a bit messy. But we've been tracking this for you all along ever since. The 15-minute got overbought and stayed inside of a bit of a flag. You had the shoulder, head and a right shoulder there, but it was very messy. And you made this kind of symmetrical triangle for Bitcoin, and you're either going to go up or down. The dollar index took that dump to the downside all the way to 102.63.3 and continuing to dump now. I love it. Now we got to go to smaller time, 5 seconds, stuff like this. And we just got to see, this is a flag that could continue. Do you have a bullish divergence that could stop the pain? Right there, you do have a bullish divergence. Could kind of quell the storm for now. But right here, I'm looking at this. That's a bear flag that could continue to the downside. You are on the 5-second chart. But that tells us we could still go down to 102.30. And Bitcoin tracking nicely. Wow, and then we just came right back down again. These trades are crazy. Having a trade open right now with leverage is insane. Even if it's small, it's just nuts right now. Like watching the movement of my position is insanity. It's all over the place. 28,475 for BTC. And we loaded up on Bitcoin. If you're in my trading group, you saw me buy a whole Bitcoin at $19,000. I am now up a nice $9,500 on my 19,000. I made basically 10 grand on 19 grand in 3 months. If the whole world was able to make 10,000 off of 20,000 every 3 months, we'd have a pretty nice economy. A lot of people would be pretty wealthy and well off. So DXY bearish Bitcoin pump. Dump to 80. Let's go. Falling wedges break down parabolically to the downside, just like vice versa. Yes, they do. Don't know why you're so excited when USD loses value. You can buy less with your hard-earned money because I don't have a bunch of money. Because I have my whole net worth in gold, silver, and Bitcoin, you fool. And I don't like calling people fools, but I've been talking about inflation since 2010. So I've been excited since 2010 to watch the dollar completely tank. All right. If everyone becomes wealthy, then everyone also becomes poor. Not true. It's actually not true. Everyone can live in abundance. I actually figured it out the other day. Watch. So, no, because I thought this through, Jamie, the other day. Because they try to tell you that if for other people to be wealthy, a bunch of people need to be poor. But that's just not the case. And you don't have to have socialism or communism. But, for instance, it would be more of a barter system. Like, this guy would have sheep, and I would get sheep from him. And he would give me nice warm clothes, but I would grow plants and I would give him food to eat while he gave, and then he would find someone that gave him what he needed. And then we would all basically live in abundance, like all of us. Everyone would have to produce something for the other, and it would be a balanced society, and everyone would kind of take care of each other. That's really euphoria, in my humble opinion. That, I guess I'm talking about like a commune or OSHA, but you know what I mean? Like, that's really, I believe humans are meant to be tribal. They're meant to be together. We have been kind of pulled apart. And it's all about me and my family, you and your family. I've been hanging out with a family a lot lately, and it feels more comfortable to be with another family. It feels more like it's part of my innate nature to want to be with another family. When I'm just alone with my wife and kid, it's fun, but it's nice to bring two families together. Watch my kids play with their kids. My wife talks to his wife. I talk to him. You know what I mean? There's just a nice feeling about it between everybody, all right? So look, this 7-minute is super volatile. Pumped up, pumped back, pumped up again. At the end of the day, I mean, I'm just watching this triangle. This is it. I'm not going to really change the scenario. We're back. We came back inside. We bounced up again. The volatility is absolutely absurd, and we're waiting on to see what Jerome Powell says. Did Jerry speak already? Come on, man. Are you serious? Everybody, if you're a lifer, know that I'm going to get you where you need to be when you need to be there. All right? No reason to kind of sit there. People are like, where are you? You're not here yet. 3K, guys. Sue and I have an 8,000 leverage trade with no stop loss. I'm smarter than all of you. The golden god. Hey, man. I hope you go all the way to 3K, bro. God bless you. I'll see you there, man. I'm smarter than all you. 8,000x leverage. I guess. The idea is you could die today, man. So you would just want to be a good dude. That's all. Instead of us seeing who can grow the greenest grass, imagine if we all grew gardens instead. Exactly. Look at everyone trying to grow grass in their house. And everyone has these perfect grass gardens. We all should be producing money. Liquidated, LOL. But not negative unless someone messes it up. Kevin Baker. I just got liquidated. Yeah, there you go. He's right there on the screen. Pitbull Kitty. And the meeting will come at 2:30 p.m. I have it ready, waiting to start. 17 minutes till the meeting begins. 17 minutes till the meeting begins. All right. Shout out to everybody here on the live. Thank you for jumping on in. 484 people, 174 likes. Maybe get the likes up to the watchers. I would greatly appreciate that. Thank you for the love. So, again, we're watching Bitcoin closely. If I break it down to the 7-minute, break up, break down, break up again. I almost need a smaller time frame to see what's happening. 30-second is attempting a bit of a retest here. We got to get this to get a bit of a bounce. What is that? I was like, that's really your beat? That's the worst beat ever. Anyway, that beat was beat. Bit of a cup and handle here with this insane move. I mean, you could try to put that in a diamond. It's a little much, though, right? You could say that was your diamond. You broke. I don't know. I'm just being funny right now because it's a 30. I'm looking at a diamond on the 30-second chart. 15 minutes says we're going to get a bounce. 15 minutes oversold, wants to bounce on this retest. So if we just look at this 15-minute, it's respecting the top trend line here, and it's about to bounce to the upside. Also right here, you can take this swing to swing up. That's an uptrend. That's a downtrend. That's hidden bullish divergence, which tells you you're going to make a high higher than this high. So if we trust the hidden bullish, we stay in the trade till we make a high higher than this high. Once we make that high, I could jump out of my trade. You know what I mean? But that is hidden bullish divergence on the 15-minute time frame. This swing low to that swing low is to the upside, while this swing low to that swing low is to the downside. Oversold stochastics tell me that that's a likelihood of a big move. Lack of bearish momentum as well on the MACD. And we're above a point of control. We should get to the value area high up into these regions at 29,750. My target is 30K even. 30K 27 or $30,002.73. All right. And they're getting ready. They're getting things ready. You could either watch it here at the Federal Reserve, or you could watch it here, at another, wherever you'd like. So DXY, I like this double top blast ended, but it did bounce back up. It's attempting to make a shoulder, a head, and a right shoulder there. You see that? The dollar index. Back to the dollar. And that would drop you down to about 102.40 if this completes to the downside. We want to see this come right up again and then these resistance and drop down. That'll help us know whether Bitcoin's going to flow or not. So watching this 15-minute retest, I'm expecting a bounce on the 15-minute to the upside. It negated the shoulder head and kind of a right shoulder there. Messy. And yeah, they're watching the 1-minute flag bounce back to the upside. Bit of a cup and handle there. Sammy, cup and handy to the upside. There's your cup with a handle, even with this rigid up and down press move. That's weird. 28,383 now. Man, the volatility is insane. Volatility is insane. We're going to have Bookmap up. We're going to have the Fed meeting in the middle. We're going to get it going like we always do. Get ready. I'm so excited. It's actually pretty fun. Every single time it happens, a lot of kind of interesting stuff happens in the charts. So I'm excited. You should be excited. Let's get it going. Let's get it going. Let's get a tweet out, team. Did we send a tweet out? Let's send a tweet out. So awesome. Shout out to Arcane Bear. And I always follow what Arcane Bear's doing. He's living in Costa Rica. I should be living there. Took 40 days off social media and climbed one of the Costa Rica's tallest waterfalls. Slept in a cave, looking out at the stars as it falls over the dry spot. Thank you so much. I'm wearing my old glasses, huh? I didn't even know. I'm so tired. That's so much better. Doesn't hurt my face. Does it even matter what the Fed decides at this point, says Wendy O? No. F if they do, F if they don't. Shout out to Tom Crown. Prediction time. Where will Bitcoin at the end of the day? Answer below. You think XRP pumps like this for no reason? Insiders always front run news. The only question is, what is the news? That's a nice sauna right there. Shout out to my man, Crypto Cowboy. My man. Love you, brother. CNFT enters a bull market. Interesting. What are you talking about? He's got nice. I like his stuff, man. Doing his thing. 25 basis points and markets go wild. I don't know if the market's going to go wild over 25 basis points. That's gross. That is strange. Without price stability, the company does not work for anyone. If anyone's focused on anything other than insane focus. These are like floating noises. I'm like, why? Like, why? Like, why would you give me a floating noise? Just give me some soft house and let's get it in. You know what I mean? Bitcoin CEO silent. Oof, that's got to hurt. Yeah, he's going to start moving money into the yuan. Not using US dollars anymore. It's going to get tight. Shout out to my man, Cassius Cuvée, man. My man. Met all these beautiful people in when I was out there in Miami. Breaking news event, crypto event. Yeah, probably. We took part and received. Yeah, please. Yeah, Elon Musk, you know you have scams being promoted on Twitter right now. Hey, Ben, let them know, man. Let them know. Shout out to Miss Teen Crypto, Jenna. Ooh, XRP. Jenna's super happy about that big pump to 47.7 and the 77. Shout out to Laura Codlin in the house. Funny. One of my buddy's wives. Okay, 11,700 followers on Twitter as we continue to move. 25 basis points is in the game. All right. Will they go to 75 to 50 in the next rally in April? What do you think is going to happen in April is the real question. That's what we should be asking ourselves. So we got the pump so far on that 1 minute. The retest could be occurring. Shoulder, giant head, possible right shoulder. Just kind of say, you know, I'm open-minded at all times. I stay open-minded. And we can't seem to get back above 28,529. Resistance. Broke back above resistance. Resistance. It is the 1 minute, but that's a local time frame that we got to break back above for this 15 minute to reclaim its move. So far, the 15 minute is retesting back to the upside here, moving. And this trade is all over the place today. Insanity. Highest point it was at was about 25% gains. So I'm back to the 7, and we're just watching this, or no, the 1, and we're watching this flag of the 1. This is kind of where we stand here up until Jerome Powell comes on in. Could even flip to the 30-second chart to be super with it. And that looks like you're coming down with a rejection there. So far, you made an M pattern. You made a high. You try to breach it. You made a secondary low right here if you turn. Kind of not so bullish right now for the moment. And again, remember, look at the charts. Show me the charts and I'll show you the news. What do the charts say right now? The 1 hour says we're going to dump. So the 1 hour says that we retrace all the way back down. All right. So I'm seeing if the 15 minute can flip the 1 hour. 4 hours still has momentum, but seems to be turning bearish. Yeah, still got momentum. Hasn't flipped on us yet. Not too shabby. So we're all right. And the 22, which is a little high. The altcoins look better, but see how it could be curving back up? What I keep talking about, if you're new to the channel and you've never heard from me or you don't know what I do, I use moving averages a lot. And I'm looking for the price action to come up and touch this 21-day 200 SMA somewhere around this resistance point at 31,900. Looks like it's likely to happen. Once we hit that, that will probably be the inflection point of a bit of a retest or a pullback, in my humble opinion. Everyone's waiting for the pullback to 29 to 25 too. But I'll tell you why that may not happen, because of the diagonal trend line here. See this diagonal trend line? We may hold that at 26,600. We may not be able to move that. So I've been watching this diagonal trend line bounce, resistance, resistance. You got back above it on the other side. It's a spider line. Another reason why I believe we come up to the 200 SMA on the 3-day chart. Something that not a lot of people are talking about. You may not find that on any other channel but here. So just, perusing the internets of the YouTubes and all the different information that you can get. Hey, you never know. Definitely to find YouTubers that are outside the box, like a YouTuber that's just a little different. I got a few YouTubers that I like that are just a little different. I can tell they don't think like everybody else. So we're struggling. You could see that we could not get back above that resistance for whatever reason. We're going to have to fight our way out of that and plow through to remain bullish. That's going to be a struggle there for us. And here we go. I mean, look, that is a shoulder. That is a head. That is a right shoulder. That tells you you're going to dump easy to the downside. Not as fun as the last Fed meetings, but he hasn't started talking yet. See what happens when he starts talking. I love the questions. I love the interviews. No, I do. The last time, I went through that entire Senate hearing. I realized how much I loved every second of it. I was like, I love this. Just watching how he circumvents, what he says, and just kind of what the implementation means around for the rest of the people in watching. It's like watching him squirm. You know what I mean? And then seeing how the market reacts. I find it fascinating. The entire thing is fascinating to me. I get excited to stream this. You should be excited to watch it with me. Let's get it in. Shout out to the 623 people on the live. How come we can't have 1,000 people like we had earlier today? We had 1,200 people on the live stream this morning getting ready for the meeting. We have less people wanting to watch the meeting. Usually it's the opposite, but that's actually a good sign that the stream is stronger than the Fed stream. I like that. That the lifers want to come for the liferness. So may God bless everybody here. I do see a shoulder, a head and a shoulder, even though it's rigid and a mess. That could dump you down here to 27,867. Kind of end the little party that we had going on here. All right. Always take profits. Don't be scared to take profits. It's okay if you sell and it keeps going up. Again, I'm not a financial advisor. Nothing I say and do should be taken as financial advice. But it's okay if you sell and it keeps going up. It's okay. As long as you got more money than you started with, you did a good thing. Too many traders are beating themselves up about a good thing. They make a good trade, it keeps going. They said, how come I didn't let it keep going? And they beat themselves up. It's just so unfair to yourself. Like, that's so unfair to yourself. Just not fair. You know what I mean? Give yourself a moment. What did I just do? I pinned that? Unpin. Right, yeah. Duplicate. And I'm under the weather today. Not feeling too good, but still plowing through. I just interviewed Rice TV for our 7 o'clock tonight segment. We had a great time together. We went over a bunch of different topics and kind of prepared us for what was happening here at the meeting today too. So I'm excited to see where we're going. I'm excited to figure this out. I would love to see us hold this support zone. And remember, this is a retest of this top trend line. All right. So we're attempting to see if this is going to become a battle point. 28,350. Are we going to get the bounce? Or are we going to give it up? 226 as we approach the Fed meeting. It's getting closer, everybody. Can you feel the tension? Can you feel the tension? Can you feel it? Weird. Oh, yeah, okay. So we're going to add this to the right side. Well, actually, no. We have to, I realized something. Yeah. I'll figure it out. But I'm going to put the screen on the right. I'm going to do the book map on the left. I'm going to do the same thing we've been doing. I'm going to move myself a little overboard. And we're going to get ready here. Here she comes on in. We're going to bring that music on down. And we're going to start. Oh, no. She faked us out. How dare you stand there and not say anything? You say something the next time you stand in front of that microphone. How dare you? Just messing with her if she's someone's sweet mother. Sweetheart. Shout out to everybody here in the live. Thank you for being here. So let me position myself here. Let me start to kind of get ourselves squared away. Squared away over here. I shrink myself down a little bit. For being sick, I feel so good. But, oh my gosh. Wow, the minutes are drooling away. They feel like hours. Insane. So far, we're negating a beautiful double bottom here on the 1 minute. Look at that. Plow us back up to this area, get us in the money, and then, you know, this is also a bigger double bottom. That measured move would take you up here to about 29,260 and complete the move. Book map still showing signs of life here. Above us, we have a massive sell wall at 29,000. Massive sell wall right there. We get into that load up, but that says we're going to go in there. It says we're going to go travel back into that area because here you have a buy wall at 27.6. A big one, too. You're talking 500 Bitcoins, 100 Bitcoins, 126, you know, about 600-700 Bitcoins in that area. Here you have 448, 281. What is this? This is Bookmap. It's showing me how many people want to buy and sell Bitcoin on the order book. Whales, Amalgamated Retail, Bybit, OKX, and Binance Futures. Right here we have 29,000 up in this area. That's a load-up point. 281 Bitcoins want to be sold. 453 Bitcoins want to be sold. 411 Bitcoins. So right there alone, you're looking at about 900 plus 200. You're looking at about 1,200 Bitcoins with some change there. And Bitcoin wants to push to the upside back at 28,500. And there's the bullish retest. We showed you this double bottom. All right. We just showed you the double bottom. And we showed you the measured move. That would bring us right here. That was your next measured move, 28,750, 740 area. Trades back up 18%. 10x leverage, which I normally never use. And there we have it, another short squeeze there as we head up all to the bigger liquidity as we enter into the meeting. So we're going to keep this up for you. We're going to keep it all up for you. You're going to be privy to the data. You're going to see what's occurring and what's happening. All right. We'll keep you informed. We'll keep you going. All right. One thing I had to do was like add different sources, right? But the sources change. Like I want to display capture, add source, but I want to add it anew and call it graph. I add that source, right? But then I change it to the actual graph above me here. Come on, baby. There you go. And then I'm going to shrink that to the left side, right? Like so. And this is where I'm going to be doing my thing, and then I'm going to flap myself on top of that. And so this is what we're going to be seeing for most of the time, all right? And then I just got to slap Bookmap back on there, and we're good to go. And we'll be able to see Bitcoin. I'll kind of get it into the moment. See that? And, yeah. Now, how I was doing it so well before. I guess I was using really small time frame, like the 1 minute, and just, like, zeroing in. Not how I did it so well last time. I think I gave a little more love to the screen, right? Oh, and I definitely took this down. And I maybe shrunk myself a little more. Gonna have to be less vain. I'm gonna have to take off less screen, you know. Oh. All right. Let's go, Jerome. You're late, dude. You're late by a minute. Stop wasting our time. Enough is enough. Wait, I'm not live yet. Hold on. There he is. So sorry. Let's get it in. I was late. He wasn't late.
Banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system,
I just want to give you
that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity.
No, it's not.
We will continue to closely monitor
That's not
conditions
true.
in the banking system and are prepared to use all of our tools as needed to keep it
Remember,
safe
when a government official tells you the banking system is strong, it's not. When it's strong, they don't have to tell you that.
and sound. In addition, we are committed to learning the lessons from this. Inflation remains too high, and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone.
And his tie slanted. He didn't even do it nice. He did
In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
I'll make sure my tie's perfect.
The U.S. economy slowed significantly last year,
whacked.
with real GDP rising at a
is.
below-trend pace of
I would never show up like
0.9%.
that. Never.
Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year.
Heavy bleeding right now.
In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%.
Oh, God.
Over the 12 months ending in January,
Stop.
total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%.
Yeah.
Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy.
You're never going to do that. Don't you get it?
Despite elevated inflation,
You're not going to get to inflation. Like,
expectations
what makes
appear to remain well anchored, as reflected in a broad range of surveys.
Look, I showed you the head and shoulder pattern.
Forecasters,
it played out to the
as
exact
well as
target.
measures from financial markets.
I just showed you this pattern right here. Look.
The Fed's monetary policy actions are guided by our mandate
head and shoulder,
to
and that was the
maximum
measured move.
employment
It's exactly
and
where we
stable
just went,
prices
right there.
for the American people.
I just gave you this short trade.
My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate and we are strongly committed to returning inflation to our 2% objective.
Dude, leverage trading is for
At
the
today's
birds.
meeting, the committee raised the target range for
Straight
the
up,
federal
for the
funds rate by
birds.
a quarter percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings.
Wow.
Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate.
Ooh, what does that
We
mean?
will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation.
Thank you so much for that.
And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects
It's never
that
gonna
the
evolve as
appropriate level
projected.
of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections,
It's recovering right
reflecting
back up. Look at
offsetting
this.
factors.
Just wrecking the traders.
These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country.
Oh, come on.
Everything we do is in service to our public mission.
No, it's not.
We at the Fed will do everything we can.
Then get
to
rid of the
achieve our
Federal Reserve
maximum
if you care about
employment
us.
and price
Stop printing
stability
our money to
goals.
zero.
Thank you. I look
Such-
forward to your questions.
Such a, I get, it's so frustrating, man. When the truth is never spoken and they try
Colby
to
Smith
act like
with
it's
the
the
Financial
truth.
Times. How confident is the committee that the recent
Colby.
stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we considered,
good question.
we did consider that in the days running up to the meeting, and you see the decision that we made, which
Get a pump right now.
I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over
that
the
head and
course of
shoulder
the
told
year,
you where prices
more than
going?
we'd expected at the
Unbelievable.
time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation.
Thank you.
Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused as always on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
He didn't say anything. He just didn't say anything right there.
Mr. Chairman, can you explain
It's the chubby
the
guy.
difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy.
On.
In which case,
Are you serious?
inflation will continue to be strong. In which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know.
Come on. Then why don't you just say you don't know and stop doing things like you do know?
Further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility.
I called this short before it happened on the head and shoulder there. You can see it. My measured move, we're going to take you to 28,000. We dipped down to 27,668.
The Wall Street Journal. Chair Powell, in your testimony 2 weeks ago,
Powell.
you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and the people who write the minutes will be very carefully counting. But I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first part, the first 5 weeks of the intermediate period, pointed to stronger inflation and a stronger labor market. So that pointed to higher rates, and then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
We know that we have other tools in effect, but no, we think our monetary policy tool works.
We think.
Many
think.
banks.
We don't think here in this trading group. We
well
use
telegraphed
use
to
the
the market,
data.
and many banks have managed to handle them.
He just said nothing. He just said nothing. He said, we think that the
Hi,
banks...
Victoria Guido with
He
Politico.
didn't answer that question.
I wanted to ask, you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why
Which
that
many
decision was
are
made. Was
Chinese
it purely a
from
confidence
another
issue,
country,
or
like-
was there a
like
concern
we're giving money to
that
another
there
country.
would be some sort of economic contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly. That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision. I realized
Huge short
right
squeeze right
away
back to the upside.
that,
V-shape
that there was
recovering
going to be
now.
a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And what we did was early Monday morning we sat down and said, let's do this. And he was
we're
obviously
back
gonna
inside the
lead it
pattern
in
now,
his
see?
capacity. So
Now
I
means you
don't-
can break out again.
My role was to announce it, and
a whipsaw.
I get briefed on it, but I'm not involved in the work of it.
So the guy you
Chair
asked the
Powell,
questions for
Howard
doesn't
Schneider
know
from
the
Reuters.
answer to the questions.
So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes, I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But yeah, absolutely absolutely the same. The story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44% of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February and we still don't have now is a sign of progress in the non-housing services sector, and that is that's just something that will have to come through softening demand and perhaps some softening in labor market conditions. We don't see that yet, and that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue, and we don't really see it yet. It's so people are making estimates. People are publishing estimates, and it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real, and that argues for being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Gina.
Bitcoin just recovered right back into the pattern.
Hi, Chair Powell. Gina Smilik from
Now
the New York
it's at the
Times.
top
Thank
of the
you for
pattern.
taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank, and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision.
I think.
So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. we know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest.
She's not saying anything.
So,
She's looking at him like, when are you going to talk? You haven't
as
said
for us,
anything yet.
so for our part, we're doing a review of
Yo, he just
supervision
didn't
and
say
regulation.
anything again.
My only interest is that we identify
That's
what went
crazy.
wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that.
Try.
And then make an assessment
Try.
of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. You know, I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week. So, but that will be up to him.
Yeah, he doesn't want to say anything
So
or put his buddy
that's
in.
really where it is. You know, the review is going to be thorough and transparent. It is clear to your last question. It's clear that we do need to strengthen supervision and regulation. And I assume that, you know, there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
Sorry, and the final point, you know, can we feel confident that these weaknesses don't exist elsewhere, given that they've
I told you he
unlisted
didn't even
this
know how
bank?
it happened. So
These are
in
not
answer to your
weaknesses
question,
that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, you know, they were on this issue, but nonetheless, this still happened. And so that's really the nature of the of the review, is to discover that.
Michael McKee from
He didn't say
Bloomberg Radio and
anything.
Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time.
This guy can't stand him.
Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
that's a good
So
question.
we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see
Back to
and
28.9?
5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's happening among the banks and asking, is there going to be some tightening of credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from tighter credit conditions. So that we're looking at, and it's highly uncertain how long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
No, you won't. Why are you lying, man? I tell you right now, and I'm going to run in 2032 as the president, they will never
Chair
get
Powell.
inflation at
Rachel Siegel
2%.
from
I'm going to
Washington
tell you
Post.
right
Thank you
now.
for
I'm
taking
telling
our
you that right
questions.
now.
I know we've talked
Hold
a
me
bit
to
about
this.
how Silicon Valley Bank was unique to a certain sector of the economy. But there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of
Yes.
what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong.
I
It is
really
sound,
don't
it is
think-
resilient. It's well capitalized, and I really don't see that as at all analogous to this.
One other question. Would you be open to an independent investigation separate from the Fed's probe?
Please.
I welcome. It's 100% certainty that there will be independent investigations and outside investigations and all that. So
Please.
we welcome, when a bank fails, there are investigations, and of course, we welcome that.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that
They keep adding money,
we take
though.
fiscal policy as
They
it
keep
comes
printing
to
money.
our front door,
It's not
stick
making
it in our
sense.
model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2%.
No, you
in
will
time.
not. You won't.
And if I can follow on that.
I bet money he
But they're
won't.
working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
You know, if you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic, and then as the pandemic programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning, perhaps, part of what was driving inflation.
He
but
doesn't
that's
know.
not
He
really
says he
the story
thinks.
now.
Let's go to Neil Irwin.
It's what he thinks when he doesn't know, but when he
Hi,
says
Chair
he
Powell,
does know.
Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's
Oof.
been around a long time?
Bang.
And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheet last week supporting that deposit guarantee?
Sure. So 13.3 seemed like the right, we have a little more flexibility under Section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be
What
the right
requirements
place.
are
So
those?
with the FDIC, we're lending to in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end? Thank
No,
you.
absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching what's happening with inflation and in the labor market. So we'll be watching all those things, and of course we will eventually get to tight enough policy to bring inflation down to 2%. We'll find ourselves at that place.
No, you won't. I bet you they won't.
Hi, Chair Powell. Thanks for taking the question.
I'm going to run for president. They're not going to get to 2%.
I have a couple questions about the
I'm
balance
going to run
sheet.
on that.
First of all, I'm
gonna
curious,
run on the fact that he
at
never
what point
got
the
there.
financial supports that
I
the
know
Fed
he
is
won't.
extending
For
through
a
the discount
fact.
window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So people think of QE and QT in different ways, so let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared
He's lost his marbles
to change
on this
that
one.
if that changes, but we don't see any evidence that that's changed.
This is the craziest. He's not saying anything anymore. He's done. He's cooked.
Hi, Chair. Katerina Saraiva with Bloomberg News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed do anything about that at that point to ultimately prevent, what happened this month?
Yeah.
I mean, to be honest, I don't recall the specifics of that. It's been quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as it is now on the public record, the supervisory team was apparently very much engaged with the bank repeatedly and was escalating, but nonetheless what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Oh, God.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
I will have to come back to you on that. Yeah,
He's like, if I say that, I'll get caught up. He was like, "Whoa."
Simon Urbanovich with
Any
The
real
Economist.
questions
Thank you
don't
very
get
much.
answered.
Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors? Thanks.
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to
Tanking
protect
right now.
depositors
Absolutely
when
tanking.
There's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
So I don't trade Fed days, man. I don't put a lot of money on Fed days. It's not smart. In my
Thank you,
humble
Chair
opinion.
Powell. Greg Robb from MarketWatch. I was wondering if you could give us a little bit more
Look at
color.
this volatility.
You gave just
This is
a little bit
insane.
of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Nicole. Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And I mean, there's really, we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
Oh, come on.
The question is, historically, it's hard to...
You can't print all the money in the world and get back to where you were. You printed too much money.
Yes, sir.
And they're going to have to keep printing money to stop the pain.
Historically, it's been
This is
hard to
insane.
contain
Like, is anyone seeing this?
unemployment,
This is
and
nuts.
the question is, do you worry about some sort of snowball effect, and how do you factor that in?
She's like, you didn't answer my question. She's like, you didn't answer my
It
question.
depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work
He will not
in a kind
answer
of
the
linear
question.
way. If you have
He
more of
won't.
this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be. And so, we're very focused on getting inflation down, because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without
Major
high inflation, and
dumpage.
we had several of those, and they're very
Major
good for
dumpage
people.
right
you
now.
see late in an expansion,
You couldn't have traded
you
this.
see
This
low
was all over the
unemployment,
place.
you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try
Massive
to get back
dumpage. This meeting doesn't look good. It's not giving
Chair
anyone
Powell, Jean
any
Young with Market News.
confidence. It sounds
I
like he
just
has no
wanted
idea
to
what he's
ask,
talking about.
with all the events of the
Makes people
past
think banks
2
are going
weeks,
down.
Do you still see a possibility of a soft landing for the U.S. economy?
It's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been
The banks going down did not help your
changes in
cause.
that. The question
That's
will be how
honest.
long this period is sustained. The longer it's sustained, then the greater will be the
price of Bitcoin.
the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and we're certainly trying to find it.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. That's and I guess there were 6 of them. So.
And getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. What can we do to make sure? But again, that's not for me to answer.
So you
today.
don't have specific thoughts on that?
Well, I see. If I did, I wouldn't share them because I really, this review's going on, and I want nothing other than us to find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want.
It's like someone that worked on cars for years. You don't know why the car messed up.
Half-formed or partially
Get a
informed
life.
thoughts. It just isn't appropriate.
so
There's a
disrespected
real
right now.
serious review going on with people from all over the Federal Reserve
stop.
System who are not connected to
Stop.
this, to this
So
work.
sick of this,
not connected
man.
to this bank, and under again Vice Chair Barr's leadership, and I'm
Just
confident
stop.
that it will produce a satisfactory result.
Stop. Like, are you sick of being liars?
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance.
crazy.
Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the balance sheet implementation.
Massive dumpage.
That's not something we've discussed yet. As I
Massive,
mentioned,
massive
we're always
dumpage.
willing to change that if we conclude that it's appropriate. But we're
Liquidating.
really not seeing any signs there. Sorry, then the question before that was, just give me a,
Curious how you view financial conditions now, and if
Yeah,
credit were
okay.
to tighten enough, if that would prompt a rate cut.
So, financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. So we think that, though. So there are other measures which
think.
if they're
It's
focused
like,
on,
come on, man.
bank lending
I
conditions.
think
and
the
things
bear's
like that,
over
they show
there.
some more
But he's
tightening.
not. He's over there.
The
Like,
question
come on,
for us,
man.
though, is
Like-
how significant will that be, and how, what will be the
So
extent of it, and what
crazy,
will be the duration
we
of it?
think.
And then, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, so that's all I have to say. So,
Thank you.
thank you very much.
That was it, huh? That was bad. And I tell you what, we're gonna break down Bitcoin now, but that was horrible. That was absolutely horrible. That was the worst meeting he ever had. Even before he used to BS a little bit. He said, I think 100 times on a bunch of questions that we needed real answers to. He said, I think. Like, he didn't actually give an explanation. He didn't say anything. That was absolutely horrible. That was his worst performance of his life, in my humble opinion. He has been working for these federal, companies, for his whole federal agencies for a long time. He has no idea why the bank went down. He has no clue. He has no insight. He has no hypothesis. He can't even begin to break it down. You know why? Because if he even breaks it down a little bit, he's going to incite so much fear into the markets. I'm telling you right now, if you didn't see that was strange, when a government tells you that the banks are okay, they're not, okay? I just want to make something really clear to you. When the government says you everything's safe and to stay in your homes and it's okay, it's not safe and it's not okay. If everything was okay, no one would be saying anything. It would be a regular day. You'd go to the baseball game. You'd come home. It would be a regular day. You wouldn't go through any of this nonsense. But is that the case? No, it is not. That is not the case. So when we look at this and we continue to understand what's happening here, they're trying to tell you that things are okay when we clearly can see that they're not. Let's get rid of my small movement here on the smaller time frame. Things are going really well. We had an ascending triangle. We were oversold on the 1 hour time frame. 15-minute was attempting to get a bit of a pump on the oversold nature. We thought we could get this retest to the upside. We got slammed by the Fed meeting. We got an absolute slam. People got absolutely liquidated. Anyone who was in that long there, once you lost this area, that would have been a place for me to close the trade. Once this area fell, a smaller time frame might have shown a bearish retest, but an ascending triangle breaks up or down. All right, you have to understand this. It breaks up or down. It's a bilateral pattern. The measured move is the length of the base of the triangle right there. You're either going up to about 29,564, or if you hold control here and swing this down, and look, this is just nuts. So you could have shorted this pattern the second you broke back inside. The second the retest didn't come in, you started down here, open up a short, play it down to the downside. If you were watching us on the smaller time frame, on the 30-second, we gave you this head and shoulder right before it happened here. While I don't know if people saw it, but I said shoulder, I said head, and almost I saw a shoulder, a head, a right shoulder, right shoulder. I saw a complex head and shoulder. That had a measured move from the headline to the neck. That told you were going to drop like that from the neckline. Look, we careened right down within a minute after me pointing this out, showing you how technical analysis does play out. It doesn't matter what they're saying. Like, look, so you could say the meeting did this, but the head and shoulders said it was going to happen before it happened. So I like to show people how technical analysis does play out if you couple it with the news so we can see things happen. So where are we now? Where do we stand now? Well, I'm going to just reassess. Anyone who's watching, I'm going to delete all my old work. I'm going to delete the moving averages, and we're going to start fresh again. We're going to have to start fresh like we do every single day. They've kind of changed market structure. Things have been slightly adjusted. Let's break it down. Let's look at the most bearish scenario for the day. That is a bearish divergence. This is kind of it has resembling feels of a shoulder, a bit of a head, and kind of like a slanted right shoulder there, even though it's a very, very, very sharp move. It has some head and shoulder vibes. All right. So right off the bat, we see that. This was the pattern that I was, been forming for the last few days, this symmetrical triangle that did break up to the upside technically, but gave it all back to the downside. Even kind of, in my opinion, lost the bottom trend line. If you'd say that it was trying to hold on to it, it definitely lost the bottom trend line. So, all right. So right off the bat, we see some bearish divergence. This is a rising wedge. Rising wedges break down where they began. You would see a move back down here to about 26,800. If you lose that zone, you're going back to 25,260. That's the areas that we know of, right? Let's look at our big time daily time frame and take a look at what's happening and assess the situation. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate you, beautiful people. 921 people on the live stream, 411 likes, $11 in chat revenue. Thank you so much. Our second stream of the day, and I also interviewed Rice TV. He's going to be on my stream tonight. We're pushing out more content as much as we can. We want to become one of the most active YouTube channels that you've ever come across. We love our channel. We love our subscribers. We push forward every single day to give you the love, to keep you moving, and we're here for you every single day of the week. I haven't taken a day off since February of 2021, and I don't plan on taking one in 2023. So I'm going to be here every single day. If that doesn't motivate you to go after your dreams and your goals, I don't know what will. Watching me show up every single day for my dreams and my goals has to motivate you to do the same. How could you watch someone show up every single day, tirelessly work, and then see their life blow up and not want to, see that you could do the same thing for your life? So just remember that a lot is coming for you if you believe in it. You will create the opportunity in your life if you believe there is opportunity there. Another thing is we did hit the resistance. We talked about this morning. Previous support becomes new resistance. Bounce, 2 bounces right there on this yellow line. You can see that became an area that we came for resistance. So could have been a nice short zone anyway without even looking at what happened to the Fed meeting. Just this simple idea. Bearish divergence in the daily. The daily is extremely, extremely overbought at this point. Also here now, that is a swing up. The whole thing is a swing down. That is bearish divergence. You're overbought on the RSI. You're turning down here. You're kind of spent on the daily. Daily suggests that we do get a pretty big pullback. How big is the question? What I keep talking about is this diagonal support line. And this is a diagonal region. You can see that we have bounced off it a few times, and we've resisted it a few times. I'm attempting to put out the idea that we could stay inside of this ascending triangle and make a bigger move to the upside. It's crucial that we don't lose this diagonal trend line. We lose the diagonal trend line, we're definitely coming down to 25,200 quite easily. 22 and the daily are both pointing to the downside. Both tell you that you got some bearish tones. Even the 2-day says enough is enough. The only thing I was saying is could the 3-day pump all the way up and touch the 200 SMA? That was our kind of holy, basically our Hail Mary. Can we get there? Could we get that pump up? Very interesting. So it looks like we have now hit a resistance. Shorting resistance is usually a good idea. Opening up a short here wouldn't be the worst idea with a stop loss above the previous next area of support. So like you open up a stop here, a short here, insurance short with a stop loss up in here. There's a chance that this continues to the downside, right? One other idea here is that you're in a rising wedge that you broke out of, broke back inside. You can kind of open it up there Yeah, I don't want to take away that, but there's an idea that this could be a rising wedge if you open that up like this. It's a little much, but I think I'm pushing it there. So where do I sit? Where do I stand? What happens tonight? What are the trades that are open for us? What is going down? What do I see happening for the day? So, well, let's take a look at it. Let's reassess the situation. So right now, the bigger time frames to me are starting to get pretty overbought, right? Your 4-day has a little more gas. Your 5-day, I've even talked about how the 10-day really wants to dump on you, and the 10-day is very overbought. Every single time the 10-day gets overbought, and look, here it hit the 50-day moving average, and it started to dump. Here it's right at the 50, and it's overbought. So I'm just giving you some bearish scenarios here. You're getting rising volume with rising price, which is a good sign. But the second that starts to fall off a little bit, it also tells you that you're going to lose some of the buy control. So I do see some slight bearishness here on the bigger time frames. 27,600. We were already up at 28.5 not too long ago. So the daily doesn't look amazing. I got to give that to you. In the 22, these time frames are starting to kind of, basically show signs of bearish divergence, rolling over, and we could break down. I'm watching to see if, even if we break down, can we go sideways and keep this whole, this symmetrical triangle? This is really the shape that I'm watching. If we stay in there, 3 or 4 days go by and I'm here, I'm going to be more bullish. If a couple days go by here and we're doing this, I'm going to probably open up a short and let that rip to the downside. So watching this closely, this is really going to give me the example. When we lose this diagonal trend line, it's going to bump and run back down. If we stay above it, we'll probably pump back up to the measured move at about 31,500. So I got bearish and bullish things in my head. I'm not ever a full-blown bull or full-blown bear. I do believe in the long term, Bitcoin will go up in value, okay? I do believe in the long term, Bitcoin will go up in value, but we will see some pain on the way up and on the way down. So let's reassess the situation now. I'm just going to look at the actual shape that we had going on. Things were looking really good today. We were drawing this pattern all the way. It took us 2 days to really assess this pattern, although since Sunday night into Monday and Tuesday. We hit a big gain this morning on the trading group. I had put it out like this, and this popped up nicely to the move, and then we got even more of a pump. It was actually an explosive move this morning. It's like they were fishing for people to try to open up shorts, I guess. I don't know what they were doing, but they're trying to pressurize the system there. But we did get a good pump this morning in the trading group. It was amazing. We came back up, looked more like a retest. We fell back out. So here we are now. Let's take a look at our 15-minute, extremely oversold. No real crazy divergence yet. So here's the deal. Can you V-shape recovery back inside? It looks like we will get a bounce back up. If you get a bearish retest, that's going to be a perfect short to extend. If you get back inside this pattern, there's a chance you could break on out. So we'll watch it very closely. And the 15-minute really is going to either bearishly retest or break back inside the pattern. To me, it looks more bearish now at this point. I'm more bearish than bullish because we've lost some previous support regions that were strong, and we've given up that beautiful diagonal trend line there that was holding us inside the ascending triangle. We also didn't bullish retest like we wanted to, and now we're kind of on the other side of the fence. So right now, I'm a little more bearish than bullish. I'd watch a V-shaped recovery by the 15-minute, but I'm not going to be posting tons of charts in the trading group. I'm going to wait about 4 to 5 hours. I'm going to let the market reassess. Tonight, I'm going to scan again, and then we're going to kind of see where we sit. You don't want to run into markets right after massive moves like this. I like to let the dust settle, see what happens, see what's going down. If I assess the situation right now and I want to see if we're going to continue to go up, that's kind of a shoulder ahead and a shoulder there inside of what looks to me like a bit of a bear flag. We got this here too, which is like, a nasty measured move to the downside. That could bring us lower to 26,300. So, that's how I look at this. This looks like we're going to mainly go further down. I'm looking at 26,300 as the target. This looks like we will go lower just based on the situation that I'm looking at. No guarantees, but that's a bear flag, and the 1 minute wants to tank on you with a bit of a head and shoulder, and now you have a 27,650 area of resistance that you'd have to get back above. I'll reassess this whole situation again tonight. I need a moment to take my eyes off the screen. I've been streaming since literally and doing updates since 8 in the morning. I need a break. I've been working for literally 7 hours straight. And so maybe like a 5-minute little interlude in the middle. Shout out to everybody here. May God bless each and every one of you. Thank you for jumping on in. I'll be back in the trading group for more. I'll keep you updated. And it was sad. It looked like things were going well, but then he didn't answer any of the questions. He made it look like he was hiding information, which made it look like the system didn't look good, which made it look like we were going to tank, which added a lot of bearish tones to the situation. He also acted more dovish, more hawkish than dovish. kept talking about how he would do anything it took to get to 2% no matter what the market said. It just doesn't make sense. That's not what you would say. Also, he kept saying, we think, we don't know, we're going to assess. He had no affirmations. He didn't speak in affirmations. Sounded like someone he sounded like a car mechanic that had never, ever fixed a car in his life. You know what I mean? It seemed like he didn't even know what he was talking about. Everybody, thank you so much for being here. Shout out to the 931 people on the live stream, 463 likes, $35 in chat revenue. Thank you for the comments. Thank you for the support. And I'll be back in the trading group in a little while. We are running back up here to 27,500. Can we close a daily candle above 27.5? That's going to be your psychological support for the day. Everyone, thank you so much. And I'll see you tomorrow